Hey guys, I decided to go a little bit early just to get the live show going, get us on the road, and hopefully everyone will turn up soon and we'll all be here and we'll have a lovely show today. So here we are live. Don't forget the risk, guys. Most traders lose money. If you're unsure and you don't like risk and you don't like losing money, you probably shouldn't be trading. For those of you who like the news, guess what? It's jobless claims day again. Initial jobless claims. And, for years now, they've always been around the same level. So I don't know why you guys worry about them so much, but it'll move the markets up and down like it usually does. I think you'll only have a problem if that ever gets to like 50,000 or zero, or if it doubles like 400,000 or something like that, then it'll go mad. The S&P is not doing anything, sitting in the same place, not going anywhere. But hello, everyone, and welcome to the show. Let's get going and let's have a look at what we got. What trades have we got on the go? My fault, I did dump Brent because I wanted to add this Aussie dollar, New Zealand dollar. Can't have too many trades on the go here. But I dumped it in a profit because it was just irritating me and it was hitting a level, and I just, okay, let it go. I think we made $60 on it, just let it go. It's a small, it's not even a win. But what we do have, we have the US dollar, Japanese yen, which I've moved the stop loss up into to break even. Maybe a little bit above. And we've got the euro Canadian dollar, which I've also moved the stop loss up to break even. Hopefully it won't reach that. And then Aussie dollar, New Zealand dollar, I took that trade on behalf of everyone. I think someone did call it last week. Can't remember who though. Someone said, let's go short. I think it might have been this Aussie dollar, New Zealand dollar. I don't know. But I noticed that it hit the resistance. And I looked at the past, and this thing has just been in this range for, I don't know, about 100 years. So to me, it just looked like a good opportunity for us. So it's come out of the resistance. It's bounced out of the resistance. Nice red candle. And it's also now dumped through this trend support, which is absolutely perfect. So we've gone short on that. The New Zealand dollar, US dollar is not working out for us just yet. It's really giving us a headache. Perhaps I should have dumped that one and not Brent. I don't know. But here we are. We're sitting in it and we'll just live with the situation as we have it. But it's not going up. It's not doing anything. And I really expected that it would have by now. It hasn't done a damn thing. It's just sitting in a straight line here. I'm hoping it doesn't do the old collapse thing. Okay. G'day. How's it? Welcome to everyone that's here. That's good. It's good. It's good. It's good. Yeah, so never assume anything. Assumption's the mother of all evil. Let's just have a look at that Brent trade. I dumped it over here, just close to the 75 level. It was a bit below. And it has gone down a little bit further. It was right on this what was a trend resistance that it broke through. It came all the way down. We did the short, and it hit the trend, what is now support. And I just decided, well, if it's hitting this level and there's another support running straight across the bottom here, so just a little bit ominous, I thought let's just let that go. There is a main support down here that I was hoping for target for, but I just didn't like the look of, you see there's a level there, level there, level there, level there, level there. So it's hitting this trend support a number of times, and we've got it going this way. It just doesn't look good. It might just bounce to the upside. So I just decided to let that trade slip through our fingers and go away. So that's fine. It's gone. So yeah, that means we've got these trades to worry about, and that's about it for now. Anybody else got anything, you're welcome to let us know. Anybody out there who feels we need to sell any of these trades, you need to let me know. But you know how I feel about, I don't really want to sell the trades if I can help it. Greetings, Lincoln. Welcome. Good to have you back here. Still driving that Oldsmobile, hopefully. And driving around, man, driving around. Let's wait for everyone to get here. We've got 9 concurrent viewers. When we get to 100 concurrent viewers, then we'll start looking at maybe putting more live shows out. But as we stand at the moment, 9. So yeah, okay. So we don't need more live shows at the moment. We don't need more videos either. I think I do put quite a lot of videos out. So let's actually consider, I don't know, should I keep on putting that many videos out? Should I reduce it? I don't know. We'll see. Morning, Wendy. Yeah, it was on your usual route this time. Yeah. Where do you live, Wendy? Oh, what area, what country are you in? It's interesting that you're out there at this time of the day on your route. Okay, right. US dollar, Japanese yen. Let's just have a look here. I just hope it's not rolling over, but yeah, if it does, it does. We've got this trend resistance here. I'm really hoping that it will go all the way to our target and not dump us out of the trade early again. Hopefully we get a decent win on that. Hi, Kevin. Yeah, you had your children there. Chaos, that is chaos, yeah. Okay. Yeah. Luckily my children are old and out of the house. Time for grandchildren. But yeah, that's next. That said, I do have, like 5 dogs here and my wife's parents and a whole bunch of things going on, so that's interesting. Texas, wow. That's my nephew lives in Texas somewhere. Not sure where though, but yeah, he lives out that way. And yeah, he's been there for what? Oh, no, more than 20 years, I think. Long time. Okay, so we're back to that again. Right, so a whole 11 viewers. Right, come on, we need some more, guys. Let's go. Let's get some people on the show. I know I started the show early. Hello, Eugene. Welcome. Let's get the show on the road, man. Let's get the show on the road. We can talk a little bit about a few things. There's somebody who asked me about Heiken Ashi. I don't even know how you pronounce it properly. And also depth of market. They're asking me about depth of market. Can't really show you on this platform a lot about depth of market, but I'll try and give you a little bit of information on it. Let's see if it helps any. Okay. Because depth of market is very straightforward and very simple. There's not much to it. You put your trade in, it'll be in there somewhere. And the Heiken Ashi, I don't know why people are getting involved in the Heiken Ashi, but we'll discuss it when that chappie who was worried about it turns up. Nova Scotia, freezing here today. Isn't it always freezing in Nova Scotia? I don't know. Like frozen over, Yeah, don't eat ice cream there, something like that. Texas, always nice. And whenever someone mentions Texas, I just think of the big steaks that we have here in South Africa. We call it a braai. You guys obviously call it a barbecue quite often. And we live for that. A good beer, a good barbie, as you guys would call it. We call it a braai. And you can talk to us a bit more about our trade of the day. Yeah, we can do that if you want to. We can talk to you a little bit more about the trade of the day. I'm just waiting for a few more people to actually pitch up, for people to get here. That would be handy. Everyone would, turn up and get some more concurrent viewers, and we can discuss a few things and get on the go, so to speak. But yeah, while we're here, okay, so we've got about 16 people here. Let's talk. Let's talk about the trade of the day. The trade of the day is Aussie dollar, New Zealand dollar. I picked that up this morning, Wendy, because I looked at the Australian dollar, New Zealand dollar, and I just it's in a range, and it's so in a range. For the guys who are looking at the screen, you can see I'm pushing this back, and it just, how many times does it hit this resistance? I mean, it just doesn't go above this resistance. It never goes above this 111.5, apart from 2 spikes here. There was a couple of spikes last October, November. There was a couple of spikes where it went through the 111.6. Before that, the last time it even reached 111.5 was last June, July. Okay, so this guy has been sitting at this level for a really long time, not going anywhere. And I just noticed that it drove into this resistance and swung around, and the red candles have come out of the resistance, This is how we trade, guys. You got to take your trades. It's 50-50. I always tell you the market's a 50-50 game. It can go with or against it. There's just no... It's a game. It's 50-50. You're trading against other traders. But when you look at this, human beings are creatures of habit, and what happened before will probably happen again. So human beings are looking at this. It's hit the 111.5, 111.4, which has been hitting a number of times in the past. The red candles come out. The people have started selling because everyone, supermarket mentality, thinks that's now expensive and it's time to sell. So they all start selling. So the red candle comes out. It drops through this trend support. There's the red candle. We're short. We're going down. Now, with the risk to reward, the risk is at 111.6 because, like I showed you now, hardly ever gets there. So 111.6 is a good stop loss. Small risk. The reward is all the way down, and I actually put the take profit at about 1.11110. And that is before the support. We can move it down when we get there. If it gets down there, there's a long way down to there. So I'm hoping we'll be in this trade for quite a while. And it'll take us down, all the way down to there. It's only cold from September to June. I was just joking with you. Whenever I think of Nova Scotia, I think of snow, ice, cold, or whatever. And whenever I think of Texas, I think of a desert with a giant steak. It's just natural. The way of things. It's like when you think of Mexico, you think of a sitting drinking tequila. It's just, it is what it is. That's what you think of. I don't know what you guys think of when you think of South Africa, but yeah. Yeah, no. When I think of Scotland, I think of the Highlands, that sort of thing. Yeah. It's just the picture in your mind. There's always a picture in your mind of a place. And it's actually quite surprising. What surprised me the most was when I saw Mexico in reality, what it looks like. And I had a picture of the place looking rather desolate, and it's actually some beautiful towns there. So, yeah, you get surprised by what you see. Kevin's also in on the trade of the day. Yeah, the trade of the day looked good to me, so this is why I took this trade of the day. And then the other one, we could have taken the US dollar, Canadian dollar as well. Remember, I've been telling you guys we could go short on the US dollar, Canadian dollar. But I was actually, although it had gone through this support, I was actually waiting for it to break below these lows, below the support. There's some more lows here on the short term, on the 4 hour, these little spikes. And I just wanted to see if it would break below those before I actually took the trade, and it hasn't. It hasn't broken below that. So I'd like to see it just break below those lows before we take the trade. So what we can do, we can draw just a little horizontal line in there. You see, just to picture it for us. Let's just make it nice and yellow as well so we can see what we're doing. And then we know that's the line. I just want to see if it can drop through that line. I want to know before we start looking at taking the short. I know, you're kind of moving the goalposts, but you have to sometimes. It's a subjective. So many people, like I say, always say the markets are objective, but they're not. They're subjective. You've got to look at the subjectivity of things. You've got to move the goalposts a little bit sometimes and use a little bit of gut feel. So while you've got this support here, it doesn't mean that it's a brick wall, that's it. You have to abide by the rules and it's broken through that, so you have to take the short now. No, there are some little signs here that say to me, let's be a little bit cautious. Let's watch out for those tails. Let's just make sure it breaks through those tails before we jump the gun. Even though it's only on the 4 hour chart. Got to keep an eye on that. 5 degrees in Scotland, Kevin. That means it's like a heat wave there in Scotland there, eh? A wee heat wave going on there. 5 degrees, man. That's why I don't live in Scotland. And, I was born there, but I don't live there. Although I must say, I prefer the cool weather. I do prefer the cool weather. I don't like hot too much. I live in a hot climate. I live in a warm climate. But I lived more north previously, and some of the temperatures would go way above 40 and that sort of thing. And I tell you what, I could die when it gets that hot. I don't enjoy it that much. So I prefer the Cape Townian weather, the more south weather. And here we sort of more average between the 20 and 30. And if we get a really hot day, it goes to maybe 35 or whatever the case. But Most of the time it's in the 20s. I think the average is about 24, 25 all the time here, which is just fine for me. I like it. And it doesn't really go below 4 degrees. 4 degrees is like, I think the coldest here, maybe 5 or 6. Whereas up north, I mean, when it gets cold, it goes to 0. Whereas here, our coldest is probably about 5 or 6 degrees. It doesn't really get cold. And it doesn't really get that hot either. So it's perfect. It's like the climate, the best climate in the world. Most stupid. It took me a while to find out home to turn that off. Turn that off. Been trying out Trading Nation as a platform, but not liking it so far. When you zoomed in on a candle chart, it changed the time frame as you zoom in and out. Yeah, I haven't tried it. Trading Nation. I can have a look, but I haven't tried it. Nobody loves the cold, but you can dress for it. So I prefer the cold. Yeah, exactly. My feeling exactly there. I prefer the cold. I actually prefer it when it's a bit cooler. I can always warm up. It's so difficult to cool down. I mean, I sit here, and in my house, I've got air conditioners in so many rooms, and I sit with the air conditioners on quite often. And the one room that I don't have an air conditioner in is this one, this little office. It's got fans and ceiling fans and things like that. So I need to add an air conditioner in here. But yeah, it's crazy. RJ, what is the time frame, please? We always trade on the 4 hour. Always trade on the 4 hour. And if you know our strategy, or the system, not the strategy, the strategy is different from the system that we trade on the price action. We always take our levels from the day chart and we trade on the 4 hour chart. You can also trade on the 1 hour if you want to. You can trade on any time frame that you want to. Just take your levels. Your levels are more reliable from the higher time frames. Why are your levels more reliable from the higher time frames? It's because you have a bigger sample size. For example, if you're testing something and you put 5 people in a room to test it, and you get a result where 3 people say yes and 2 people say no, you start a $1 billion company on a sample size of 5 people. That's like a 5-minute chart. Whereas if you have a day chart and you take a sample size from there, it's like having 100 or 1,000 people in the room, and you can start a $1 billion company on that because the sample size that you get will give you a much better result. Same thing. The sample size that you get from those lower time frames with your technical analysis is going to be very unreliable. But like I say, market's 50-50. At the end of the day, you're taking a 50-50 trade. No matter what you do, the market's not objective, it's subjective. You're trading against other traders. And all you're doing with the squiggly lines effectively is taking a high probability trade. Human beings are creatures of habit. You're expecting them to do the same things over and over again. So therefore, you look at the charts and you think, will we do that again? And you take a trade based on that information. It's not maths, it's not fractal, it's not all this other stuff that people tell you. It's what traders are doing at the end of the day, what other traders are doing at the end of the day. That's what you're following. You're looking at things like these initial jobless claims and continuous jobless claims, things like that, and you're reacting to that. What's that got to do with maths or objectivity here or anything to that effect? That's moving the markets based on all the traders out there looking at the result and going, I don't want to be in there in the market at the moment because the jobless claims are terrible and the world's ending and, so on and so on. Let me sell all my shares. That's what's happening. It's got nothing to do with maths. It's got nothing to do with factual. It's got to do with all the traders looking at that result and deciding what they're going to do with their money. And usually it's the big money that moves the markets, not you and I. That we're nothing in the greater scheme of things. Keep that in mind. What are we doing? We're actually living off the scraps of the big money. That's what we're doing. We're following the big money and living off the scraps of the big money. That's why we're using charts at the end of the day, because we're following what the big money is doing. Because we don't have access to John and Joe and Peter sitting in the Morgan Stanley or whatever, or the big trading rooms or whatever the case. We don't have access to what they're doing, and they're not telling us either. The only way we can actually see what they're doing is by following them on the charts, and that's what the charts are for. Yeah, that's why we trade the charts, guys, so we can follow those guys at the end of the day. It's all about getting a little bit of information. That's what the charts are for. It's about high probability. Eugenia, actually, we were short on Brent. this morning, and I should have stayed in it, but I got us out. We were short on Brent, and we were doing quite well. And I remember I called the short again up here, the other trade of the day a few days ago. I don't know if it was this week, last week. I think it was this week. Anyway, we were short, went all the way up, short again, all the way down. And then this morning I dumped us out of the trade. I took us out of the trade for a very small profit just because my gut feel was we're sitting on a support, we're sitting on a trend support, and my gut feel was let's just let it go and walk away. I don't normally do that. I like to follow the winds, but it just felt like it was going to go against us, and it didn't. So my gut feel was wrong. It's still going down, but we'll see. We'll see what happens. But yeah, I actually got out of it earlier for us on this particular platform and on my cash account. I actually dumped it, got out. The Australian dollar, New Zealand dollar, I've actually taken on my cash account. Your Euro CAD, I took on my cash account. The US dollar, Japanese yen, I took on my cash account. And Wendy's New Zealand dollar, US dollar, I did not take on my cash account for some reason, but maybe I should. Sorry, Wendy. But anyway, okay, yeah, and the Brent I got out. I'm still short on Brent. My stop loss is well in profit, so just following it down. The stop loss behind, so it breaks up, I'm out. Well done, Kevin. That's great. I would have if my Brent had been in that scenario, but what I did with Brent is I made the classic mistake of getting in too early. As you know, I got in somewhere down here, and it went all the way up against us, came back down. So for me, it was kind of relief. It was kind of a relief trade to get out. Whereas I did call it short again on the top here. I did say there's another short here, but that short would have been from there to where I actually got out this morning. So for me, it was kind of a relief trade to get out and clear a bit of profit for us. And also at the end of the day, for those of you who got in when I called it up the top here, then you would have made a nice profit. So you can actually follow it down with your stop loss now because you've got a nice clear run. I didn't have space to move the stop loss, and it was very, very narrow. It's been stubborn. Yeah, no, that New Zealand dollar, US dollar is actually being quite stubborn, as is the Australian dollar, US dollar as well. So let me know if the chap is here who wanted to know about Heiken Ashi and depth of market. If you're here, just give me a shout on the chat. Just say, "Hey, I'm here," and I'll do the old I'll do the honors for you there. Otherwise, I'll do it through the show, and you'll probably rewatch later on. I do think it will reward us. I hope so, Wendy. I hope so. Let's hope it rewards the team. I don't know how to calculate the interest on the sold shares. You know what actually happens, Lincoln? When you go long, you actually pay fees. You pay interest on the trade. When you go short, they're actually supposed to pay you. Do you know what? I haven't actually checked that on the funded markets, to be honest with you, but I think they're still supposed to pay you as well. But on my cash accounts, I know for a fact that when I go long on any product, I pay, and when I go short, they pay me. But I noticed it's normally about half. It's normally about half of what you would normally pay them. They give you about half of that. So when you're short, you're actually in the pound seat. So if you're holding a short for a long time, you're actually not paying. They're paying you, which is great. So I actually don't mind shorting on anything because I normally get paid for shorting. So I got no problem with that. You know how shorting works. You're effectively loaning the share, and you're effectively providing the liquidity for the buyer. So that's effectively where you are with it. You're working against the other traders. I missed gold, Wendy. I actually missed gold. I actually wanted us to trade gold. Remember, I said if it gets down to the 28.50, we need to buy it. And I drew this support level in for us on Tuesday and said, look, if it gets down to there, we need to buy. And then when I looked again, it was up here. I missed this completely. But then, like I say, I don't watch the charts, and I didn't put an alert in. I should have put an alert in, I suppose, but I didn't. So I missed the trade completely, but that's okay. That's not the end of the world. If you miss a trade, don't think of it as the end of the world. It's not the end of the world. It's just move on. Take the next trade. Don't panic. Don't try and get in too late or do something equally ridiculous. So one day when we get to 100 concurrent viewers, which I wonder if we'll ever get there, but if we do, then I'll start doing more live shows and we'll add to the we'll add to the whole concept. Yeah. Now look, the thing about shorting and going long. I see you say here, I understand the concept, need to give short a fair try. The difficulty with short is our psychology is naturally long, especially if you started buying shares, going long in shares, and that type of thing. And it takes quite a while for your mentality to get around short. I must admit, I mean, when I started trading, it took me a while for my brain to wrap around going short. It's not something that is simple, that is easy. It's not something that you just do. I'll be honest with you. Going short is something you really have to wrap your mind around. For me, it's natural now. I've been doing it for so many years that whether it's short or long, it makes no difference to me. But when you first do it, I do know that when you first do it, it takes a while for your mind to bend around the idea that you're actually trading against the natural course of events, let's say. Because things have a natural course of events, and the stock market has a natural course of event of going up. And you now come along and say, well, I'm going to go against that and I'm going to trade it the other way. And it doesn't make sense. It's like driving on the wrong side of the road, effectively. But once you get used to it, your mind bends around it, then it's okay. So, yeah, you also tend to, the difficulty is you kind of got to look at things in an upside down way, which you've got to get used to as well. You've got to get used to the fact that you've got to go the other way. You're used to seeing things go up, and then now you've got to flip that around. It's a bit difficult in the beginning, but if you get the idea, it becomes quite easy, and then you see the bigger picture, and it doesn't matter anymore. But no, I totally get it. I remember how it was, and I know how people struggle with that. So it's not going to come naturally to go short. Going short never comes naturally because it goes against the laws of nature just about. It just doesn't make sense to you in the beginning. But once it makes sense, it's actually... once you understand that it doesn't matter at all, funnily enough, my brain doesn't even compute whether it's short or long. As long as it's... I actually sometimes have to look and see, did I make a buy or a sell on something? I just don't know. So yeah, and selling, yeah, the one good thing about selling as well is, we don't hold trades over the weekend where we can, and I've been holding trades over the weekend on this account for us because I don't want to close the trades. But the nice thing is if you take a sell on an index, the chances of things going so well over the weekend that you're going to wake up on Monday morning bankrupt are almost nil, almost zero. How's it even possible? You know what I mean? So whereas if you're long and you could come back on Monday morning and the world's ended, and so is your account. So that's the advantage of short as well. If you are short on a product like that, 9 times out of 10, you're going to come back on Monday and everything will be just fine. And if things do go pear-shaped in the world, you'll be better off than most. Think of it that way. This euro Canadian dollar is looking a bit iffy. That's quite a long red candle that's going against us there. Hope it doesn't come all the way down because I've moved the stop loss up into cost, which for me looked pretty fair. But now I'm just looking at this and thinking, why is it doing this now? Don't do that to us now. But mind you, there is a nice little, let's just see here. Let's just see if we've got a nice little trend line here. I'm not going to draw everything. I just want to see. It's got a bit of a way to go to get to that as well, eh? But yeah, it'll have to break that before it gets to our stop loss anyway. So that's okay. We're all right. That's fine. It's not too bad. I'm just watching it drop off here and thinking, why is it dropping off? It shouldn't be dropping off. This morning, that net profit was way over the 300, and I see now it's down at 250. I was wondering why. And it's this euro dollar Canadian dollar that's dropping off here. It's just dropping like a stone. Okay, let me just see what's happening with the US dollar Canadian dollar. It's not doing much at all. That's sitting still. So it's not the Canadian dollar's fault. I guess it's the euro. Let's have a look at the euro. Big move on the euro here and against the US dollar as well. Okay. The euro is moving. Okay. It's the euro that's moving. Kevin, some brokers will offer you a guaranteed stop loss. You won't find them on funded accounts, that's for sure. But you might find them on some cash brokers will offer you a guaranteed stop loss. Most won't. Because how can you guarantee a stop loss when the market's closed? Market's closed, it's closed there. But that means the broker's covering that cost, eh? And that in itself is a little bit iffy. If the broker's covering a cost like that, what kind of brokers? That most decent brokers won't do it, eh? They won't. They're not going to cover that cost for you. They're not going to cover it. Because if the market's closed, it's closed. They can't cover that. You see, the whole thing is if the market's closed and the world ends, then the price opens at a completely different level and that money gets taken out. So somebody's covering that cost. I noticed on Trading Nation they do it at a cost. Yeah, okay, so they're charging you for that. You know, they may be charging a whole number of people for that with a view to, if we charge everybody for this, maybe we'll cover our losses. I don't know. You know, the problem with that as well is if you've got a broker that's now willing to cover that cost, that's willing to cover or give you a guaranteed stop loss. So they're covering a stop loss cost in a very dangerous situation by saying, if you pay this amount of money, we'll cover that. We'll insure that for you. It's like an insurance, okay? But the danger of that is you could wake up on Monday morning and not only find out that your share has dropped off the map or your trade has dropped off the map, but also your broker's dropped off the map because they can't afford to cover all those costs. You know, think about 2008, the big crash, and or a few of the other crashes as well. But I mean, that Lehman Brothers, that bank, think about what that did. You know, think about what Monday morning looked like. And there was a lot of brokers that would have had to close down based on that. There were margin calls everywhere. Margin calls is when they call your margin in. And Monday morning, those brokers were calling their clients with margin calls. I just remember half those clients couldn't even cover their margin calls. They're bankrupt and it's gone into the red. You got to be careful of that as well, because it doesn't just take your account out. It also, if it goes further than your account, you owe them that money. So if you go $1 million into the red, you owe them $1 million. It's insane, absolutely insane, which is why you have to be careful of those kinds of scenarios. Very careful. You only use support and resistance. Look, I know all of the different systems and methods out there, right down to the Ichimoku, to Bollinger Bands, to FVG, to Fibonacci, to MACD, to moving average crossovers, all of them. They're all lagging indicators. So my trading only consists of support and resistance by ways and means of the support and resistance levels, and by ways and means of the trend line, trend resistance, trend support. And then I'll also use supply and demand. Supply and demand, you'll see there's a couple of videos on my system that'll show you that. And that's about it. That's what I use. Sometimes, if I feel a little bit iffy about something, I'll maybe check the volume, or I might check an MACD or a RSI or a stochastic, something like that, just to see the strength in the market. But other than that, I just use support and resistance. I use the trend support, trend resistance, and I use supply and demand. Supply and demand very seldom. Mostly, let's say 85% of the time, support and resistance and trend lines. And that's it. The other 15%, I might just use confirmation with some other system. I do like the Fibonacci because it conforms to our systems. So I might check something with a Fibonacci once in the blue moon, but really not often. I don't have time to sit and go through all the systems. But what you've got to be careful of is opening up 900 different systems on one chart and confusing yourself, because you'll end up trading against yourself. because no two traders can agree on anything, and you're going to end up fighting with yourself about the trade because one system will be telling you to buy and the other system will be telling you to sell. As you know, I call the market 50-50, and at the end of the day, that's why it's 50-50. The news, as I've said before, the news is a very strange subject with me. So, for example, I will look at the news, but I will not. I spent years hanging my hat on things like initial jobless claims, CPI, producer price indexes, things. I spent my life on this stuff. Maybe mostly because I was trading mostly shares at one time, and it's important to that sort of stuff, and mostly indexes. And it was so important to me that it was like ruling my life. But then the aha moment hit me when I saw that every single time the price would shoot all the way up and then come back to where it was, or shoot all the way down and then come back to where it was. And you would be reacting to those trades. And then I found myself getting caught up in the mess as well. You know, you can trade like 5, 6, 7 times in a news mess, okay? So there was a point, it was a number of years ago, I can't remember how long ago, guys, where I turned around and said, enough of the news, no more. I'm taking that kind of news and I'm putting it to the side, and I'm not going to bother with it. I'm not going to trade news events. So how do I affect fundamentals, and how do I affect the news? How do I put that into my trading? Because now I've taken the small news and I've put it to the side, because I call things like initial jobless claims small news. So I put it to the side because it happens every Thursday, man. I mean, goodness, and every Friday, and non-farm payrolls on Friday and so on. It happens every week. So this can drive you insane. And every day, look how many news items there are today. There's so much. So I don't concern myself with that stuff at all. I know it's there. Doesn't bother me though. So here's the thing. There is some news that you have to keep an eye on, because otherwise you're going to see your butt. And that is big things. If you see certain things happening in the market, like some company with a fraud, or some company going down, or some bank crashing, or some war developing somewhere, or something insane happening between two countries, those are things you need to watch out for. Big geopolitical events, those are things you need to keep an eye on. Elections, things like that, keep an eye on that, because that might affect trading. That might affect things in the long run, because when people trade with a view to making a profit in the future, not today. You don't look at the value of a company that you're buying. You don't look at today's value. The price you're looking at is the price to earnings ratio future price. In other words, how much is this company going to be worth in 12 months' time if I'm investing in it, for example? Not how much is it going to be worth now. Even if I'm trading on a 4-hour chart, how much is this going to be worth in 4 hours' time? That's what you're looking at effectively. So that's why bigger news events have an effect on your trading. But smaller news events, what they do is they tend to push things up and then they come back to normal again, because things like that are not what moves money in the countries, right? Like, for example, in the USA, the money is caused by the money flow in the country. And that money flow in the country that pays for things and pays for the government workers, pays for the army, and companies that are working on a daily basis, asset values of companies, that sort of thing, that remains constant. That doesn't change every 5 minutes. That's not going to move things around or shift things around in seconds, right? That remains that's the value you're trading on. When somebody says, "Oh no, we didn't get that many jobs this week," that doesn't mean the markets are going to crash. If it's really bad, then it shows a signal that, okay, there's something wrong with the overall country and there could be a bigger underlying problem. That's what you're looking for, really big differences. These small little differences every week, 100,000, 100 jobs here and 100 jobs there, are not going to make a difference. if you see that initial jobless claims are 200,000 every week in that range, and then suddenly there's one for 50,000, there's an underlying problem that you need to look for. That's something you need to keep an eye on. So one eye on the news, but not important. My main concentration is on what other traders are doing and what the market and how the market's moving, because you can pick up a lot more information by watching what the other traders are doing, because the other traders are the big money. It's not you and me, it's the big money that you're following, and the big money knows what's happening, and they've got a better idea than you and I ever will. I mean, the other problem you get is if you follow all these small news items, all these little news items, and you concentrate all your efforts onto them, you're like, oh, I'm gonna concentrate all my efforts into these small news items, and I'm gonna trade that. You'll work it out in your head, and you'll say, if the jobs claims are this much, the market's gonna go up. The number of times I did that, and then when it did that, I thought, the market's going up now, and it goes down, and you think, what happened there? And it really is because the guys in the big know-how have got much more information than you and I will ever get or will ever have. They also have it before you have it. They have an advantage over you. They get the news before you do. Don't forget that. Okay, so wonderful stuff. You keep an eye on it. Obviously, you want to know if there's a bigger underlying problem throughout the markets. I mean, but don't trade on that second or on that moment. You know, sometimes it's better not to even be in a trade when there's big news coming out or the Fed's announcing interest rates or something like that, because it's just going to shove you around and drive you insane. Okay, so that guy asked me about Heiken Ashi. Heiken Ashi, he hasn't come here and said anything, so maybe he's going to watch the video at a later stage. And I'm just hoping that he's not going to turn up right at the end of the video and say, I'm here now. Okay. Hi, Rob. Suggestion, any aluminium or steel suppliers may become marginal with US tariffs. Electricity suppliers to these companies will lose significantly and therefore share price. The trouble with the aluminium and steel suppliers and that sort of thing, wonderful stuff. If you can find the companies and you want to play around with the investments, go for it. It's more of an investment thing. As a trading thing, not much volume there. But yeah, if you want to go with long-term stuff and you want to have a look at the overall picture, what I do find with commodities is they're cyclical. So what I mean by cyclical is they go up and they go down, they go up and they go down. So it's very much a trader's market. So on my investments, I kind of stay away from commodities. But in trading, I'll trade commodities, but I trade the commodities that have got high volume because they move up and down. If you've got more time with your trading and you want to take a sort of long-term punt on something, yeah, go for it. But just remember, it is cyclical. So you can actually pick if you look at a chart, it'll look like waves, and you can just pick it up on the top and the bottom. It's a bit like the VIX. It's actually a great way to make money. So if you have got that access, go for it. Do that. On these funded things, we won't be able to do it. But on my cash account, I do have that facility as well. They are there, all these companies. Since searching for a broker, I get Forex and other trading news a lot. I sometimes check against the charts. It's always wrong. Yeah, no, the news will drive you insane. It drove me insane for a long time. And I don't recommend trading on the news. It's going to affect you. Alcoa in Australia supplied by AGL Anglo. What? I guess that's Anglo-Hungarian. Yeah. You know how many times I've traded into these mines and things like that? It's great trades, you know. But you just have to understand that they are cyclical and they do go with the feeling on the day and the feeling in the market and that sort of thing. They don't just go. They're not good investments for just going straight up. You know, they don't do that for whatever reason. Okay, so let's talk about, the chap asked me about Heiken Ashi. What do I think of Heiken Ashi? what that is effectively a thing that smooths out the candles. So for me, that doesn't work for me. My opinion of smoothing out the candles is you're taking away information that I really want to see. So it'll take away that gap that I really want to see. It'll take away a lot of these tails that I really want to see. It'll show me a whole bunch of green ones here because it'll smooth them out and take away my red candles. And as you know, if you're looking for example, a demand level, you're looking for a level, for example, like this. Okay, that's a demand level right there. I don't even know what this is, euro, US dollar. That's a demand level right there because of that. Now, the Heiken Ashi will remove that. You won't see it. It'll just be a smooth run through here. So no, I'm totally against the Heiken Ashi. I'm totally against the averaging out of the candles. I want to see the candles. I want to see what's going on. I want to see the tails. I want to see the hammers. I want to see the patterns, the proper patterns, the real time patterns. I don't want to see averaged out stuff. That is not for me. Not interested in that. I want to see what the traders are doing real time. You know, don't try and change colors. Don't try and smooth things out for yourself. Don't do that. Don't do that. Keep things real because you want to see what people are doing. You want to see what the reality is. You don't want to see all this. Don't cover it up for yourself. Don't do that. Keep it real, and then you see what's happening. It's actually nuts. I mean, even I've actually just done a video which is going to come out for you guys probably tomorrow about how I got into trading and my life story trading. and I can tell you guys that, you know, we didn't even have candles when I started, man. I used to draw it with lines, and we kept it real. You just trade, you do what you see, and you keep it as simple as possible. When you start to overcomplicate things, you start to go over the top, and you start to smooth these things out, you're just going to go off on a road that you don't want to go on. You're going to go down this pathway, and it's going to lead you into temptation, and you're just going to disappear in there, and you're just not going to find your way back. You know, the crumbs that you leave behind you to find your way back are just going to get eaten by the wolf, and you won't find your way back. So just be careful of that. Keep it real. Stay away from things like Heiken Ashi. That's a total waste of your time. Then the chap asked, what is depth of market? Depth of market is a very simple thing. If you buy in or put an order in the market, whether it be a stop loss, a take profit, or an order to buy, it's going to show up in the depth of market. And all the depth of market is going to show you is the amount of people that are waiting to buy at that price or sell at that price. So what I used to use depth of market for is you're looking at it, and you're looking at how strong the prices are, how strong the sell is against the buy. Is it bearish or bullish? And you can basically tell from the depth of market where the market's going, how many people are buying at what price. What I used to do when I was buying shares that weren't so liquid is look for what prices people were paying and how many shares were available for me to buy. But, you know, depth of market is really handy for people that have got a lot of money, serious amount of ammunition lying around, because they're looking for liquidity. So they're looking at the depth of the market to see how much liquidity there is in that depth for them to buy. Because, you know, you see a price of 103,935 and there's only one contract available there, and you want to buy 1,000 contracts. That means you're going to pay a higher price because the next price is higher, the next price is higher, the next price is higher. And then you find the one that's got the 1,000 contracts and it's way up at 104, which means you're going to be paying 104 if you click buy now. So you're going to have to put an order in the market to buy when people put it on offer at that price that you want to pay. So in other words, you can put an order in at the price you want to pay and stick it in the market. That'll be depth of market. And every time somebody wants to sell at that price, it'll take your order, which is very much like if you've got a stop loss in. So you've got your stop loss in here at that price. That'll be in the depth of market. That there, with a proper depth of market. I don't know how this thing works on CTrader, but on a proper depth of market, on a proper platform, you'll see my order in the depth of market. It'll be in there. My sell order and my buy order will be in there, and that's about it. So yeah, for the guy who asked that, that's your Heiken Ashi explanation, and that is also your depth of market explanation. For those of you who don't understand anything, you're welcome to ask questions. Simple stuff. It's not straight. It's not complicated. It's not out of the realms of normality. It's just normal stuff at the end of the day. Okay, so anything else? Any other trades? Anything you guys have got on your mind that you want to look at? We can look at. Remember, win rates are meaningless. I know a couple of you guys have asked me a few questions, but I haven't mentioned it today. Win rates are meaningless. Why are win rates meaningless? Win rates are meaningless because that's not what makes your money. It's just a win rate. How much are you winning on each trade? How much are you losing on each trade? If you're losing more than you're winning, then a win rate becomes meaningless. Straight, really. What you need is a strategy where you win more on your wins and lose less on your losses. I'm going to have a look at the Euro US dollar for you now. New Zealand dollar, US dollar, the stop loss is located at 0.55000. It was bought at 0.56687. And the stop loss is at 0.5500. Here's the New Zealand dollar, US dollar. There's your stop loss. The loss is $250.11 because we risk 1% of the account, so it's $250 risk. So the stop loss is at 0.55. But remember, with the strategy, I looked at where I want the stop loss first. I didn't work out how much. I looked at, I want my stop loss at 0.5500. That's where I want the stop loss. Below that low. Then I worked out to the cost. Where was the cost? The cost was at 0.5687. So the cost was somewhere up here, right? We took it quite a while ago. I remember it was to do with Wendy and I, and we were looking at it. Okay. So we took the cost somewhere up here. We bought the trade, right? Where is it? Up here somewhere. Okay. Because it was above the trend resistance, I presume. So we took the trade and we looked at the stop loss being down here. So what I actually did is I worked out how much is $254 to that cost. And that worked out that we need to take 0.15 lots. I didn't say I'm going to buy 0.15 lots. Where am I going to put the stop loss? I said, where am I going to put the stop loss? How much is it going to cost me to there? And how many lots is that? That worked out to 0.15 lots. That's all. Okay. Then I know that my reward I want up here, somewhere up here. Because when I looked at the chart at that time, it looked like a possibility. Look where it came through. There's a good possibility it could get back to that level one day. Okay. So does that make sense? Is that what you want to know? So effectively what I've done is I first looked, I want the stop loss here. Then I've looked and said, how many lots will it take to get to cost so that I only lose $250? 0.15 lots, that's what we take. And then our profit would be taken, and our take profit is at 0.59500, which gives us a very good risk to reward at the end of the day. Okay. Right. Henry, the US dollar Japanese yen looks like a teacup forming. Dom, 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 dom. Ooh, it is, yeah. Which is not bad news. Not bad news at all. You know that, eh? Doesn't look too bad. Looks like it'll go fine. That'll be fine. Okay. Okay, Kevin, like the stream, please, everyone. Yes, please, Kevin, like said, like the stream, like, pay the likes. And like I said, one day when we get 100 concurrent viewers, we'll get more live shows. But for now, we don't have that many viewers, so we don't have more live shows. Right, how many pairs do you trade on? What's your favorite? Well, okay, what you see here is what's available here on this funded account, and our favorites are all of the above. I don't have a favorite. I honestly don't care what I trade as long as it's tradable and it's got liquidity. I used to have favorites. I don't have favorites anymore. Favorites, I'm not interested in favorites. If I see a trade, I take a trade. Trade looks good, we take the trade. This morning, I mean, Aussie dollar, New Zealand dollar. This is just a pair, and it's showing me a trade. I take the trade. I will trade any pair as long as it's got liquidity, and I'll trade any index. I won't invest in Bitcoin because it's a Ponzi scheme. Even Jamie Dimon says it's a Ponzi scheme. He agrees with me. I agree with him, let's say. But even the Wolf of Wall Street, Jordan Belfort says it's a Ponzi scheme. So, I mean, if he says so, then it sure is. But I will trade it because it's tradable. Bitcoin's tradable, so I'll trade it. It's there. I'll trade it. I'll trade Ethereum. I'll trade all of it. It's tradable, so trade it. I won't stay in it. I won't invest in it, but I'll trade it because it's tradable. That's it. A tradable instrument. That means there's human beings that are trading it, and you have the opportunity to trade it as well. You can follow the trade as well. So no, I trade any pair, any crypto, any index, any commodity, as long as it's got liquidity, as long as it's got some movement. I'm in. I'll trade it. But don't confuse that with investments. I will only invest in shares, in companies. That's a set and forget game, and I will not invest in, for example, cryptos and things like that. There you go. Business sound, thank you. Okay, good show. Yeah, no, so as long as you get that's fine. That's just the way I am. I don't need to, I don't get stuck on one pair and one trade and only trade this. Why are you restricting yourself to one pair or one thing that you trade? You're fooling yourself into believing that because you're only trading the one thing, you know more about that product, so you're going to do better with it. No, you're just restricting yourself to whatever that thing does. What you need to understand is the strategy, and if you understand the strategy, you can trade anything. You can trade absolutely anything if you have the strategy. Aussie dollar, New Zealand dollar. You see the Aussie dollar, New Zealand dollar? Okay. I took the trade already. Sell, right? Took it earlier because it had come out of the resistance and it had broken through my short-term trend support, and that confirmed for me a short trade, and the risk to reward is good because the last time it got to 111,600 was last year. So I'm taking that as my stop loss, and my reward is all the way down here. So that is, to me, a fair trade. It's in, okay? That looks great. The euro dollar, Canadian dollar, bit of a concern because there seems to be a little bit of a nasty big red candle, and I don't like to see big candles like that. Not much we can do about it, but there is some resistance. Sorry, some support holding it up here. US dollar, Japanese yen, rolling over a bit. I'm a little bit concerned about that level, but it probably will come down and then go up. And somebody mentioned there might be a bit of a cup and handle developing here. Cup and handle, good show. We'll get our target, profit target. That's on the 4th Aussie dollar, New Zealand dollar. What do you mean that's on the 4th Aussie dollar, New Zealand dollar? I don't understand what you mean by that's on the 4th. It is all. It's on the fourth trade here. Yeah, it's in a sell direction. Yeah, but okay. Anyway, no worries. Just explain to me what you mean by the. It's on the fourth. 4 hours. Yes, 4 hours. It's on the 4-hour chart. It's on the 4-hour chart. Totally the 4-hour chart. Yeah, the levels are taken from the day chart. There's a day chart, right? So there's a day chart. That's where the levels come from. And then obviously off a line chart, in case you're wondering why the yellow line's a little bit off. And you can see that yellow line, that trend support is nicely drawn on the closing prices on the line. There's your resistance on the day chart. Take it down to the 4-hour chart. You can see it nice and clear. There's your start. There's your 1, 2, 3, 4, 5 touches. So that's a really good trend line on the 4-hour chart. And then you've got a nice trend resistance in here. It's below the trend support. Looking good. Take it back to the candle charts. And you can clearly see nice red candle, which is why I don't use Heiken Ashi. Because I want to see that. I want to see that candle breaking through. I want to see it close. And I don't want average candles. I want to see what's happening there. And that's why we don't use things like Heiken Ashi. We want to see the candles. I want to see these tails. I want to see the size of these candles. They're important to me. So that's why we're short on this. You will get some green candles in between going back and forward. That's just how the market works. Okay, so Aussie dollar, New Zealand dollar is a little bit iffy at the moment, but we only took the trade today and there's a long way to go. And obviously something is happening now. What's the time? Oh, it's 3:30, of course. Yes, interesting stuff. All right, let's see. It's obviously affecting our Euro Canadian dollar trade as well. So you see what the news does. You see what the news is doing, guys. Look at all these fingers jumping around. Okay, now what you do is you take your hands off the wheel. You see it's off past. So now you take your hands off the wheel. What's actually happening now is the calendar, the news that you guys were following is actually happening. Oh, this is useless, this thing. It's not even showing me the news. But anyway, there's obviously been some news. And the jobs figures have come out, and that's going to move the markets around insanely. And then it'll all settle down again, back to where it should be. And hopefully it's not going to destroy all the trades completely. It has hurt the New Zealand dollar, US dollar at the moment. But that'll turn around and it'll find its way back. This is where all the short-term traders are getting in right at the moment and right on the news and right in the second and watching it go below the last low and then buying and that's so. You don't need to go that route. You can make your life so much simpler by just simply swing trading and just looking at the overall bigger picture at the end of the day. What's the jobs figures, Gary? Just out of interest, I bet you they're around 200,000, 216,000 most likely. Yet everybody's moving the markets around. Everybody's going crazy. Oh, quickly buy, quickly sell. Buy, sell, sell, sell. That's what the markets are about. Everyone gets excited. All those guys out there, their brains frost up and they do strange things. And then it all just settles into place again. It'll settle back into place very quickly. You don't have to worry about it. No stress whatsoever. No stress whatsoever. I guess we have a lot less viewers because we're a lot less excitable, because we don't trade on 5-minute charts, because we don't scalp. Also, because we tell people that you don't win easily in the markets and they want to see more. Maybe I'm not that interesting. I don't know. Okay. Okay, you sell down to the take profit, blah, blah, blah. I mean, your sell is still the demand zone on the Aussie dollar, New Zealand dollar, Aussie dollar, New Zealand dollar. Effectively, what I've done here is I've put a trend, I've put a support level, a daily support level in, a strong support level in here. What I've done is I've put my take profit actually above that support level. I've actually been quite generous because I would normally put it in there. And I've said, okay, I'm happy with that as a take profit because that's actually quite an insane take profit if it does reach that, but it's in all likelihood going to get there. So yeah, we keep it all the way down to the take profit. And in fact, when it gets there, we don't actually have to take the take profit. We can effectively just move the stop loss down close behind it. And if it goes all the way into the support, then we get all that money as well. And if it breaks through there, we get all that money as well. We just keep pushing the stop loss down behind it so we don't have to trade out. The only time I trade out of a trade that's in profit is if I have a gut feel that doesn't feel right, like I did with the Brent earlier. And then I just trade out of it and take the profit. But if the trade's going and it's running, then I leave it. I just don't touch it. I take my hands off the wheel. I just let it run. Sit on your hands, take a brick, break your fingers, do something. Don't take the profit, just let it run. For example, during the news, EuroCAD was going really bad. And there you go, it's coming back again. It's bounced off the trend support. US dollar, Japanese yen, it's probably come down to here and bounce up. It's a cup and handle. Aussie dollar, US, New Zealand dollar, it's below that. It's supposed to come down. You know, people get excited. They trade on smaller time frames and they jump around up and down. Look at everything. Look at everything. It's all settling back to where it was earlier, except for the Japanese yen, but well, that's fine. It's all settling back to where it was earlier, pretty much. Yes, that's the idea. It's a trailing stop loss, Gary, but I don't set a trailing stop loss. In other words, I won't set a trailing stop loss to trail the price. What I do is I look at it and I say, for example, this US dollar, Japanese yen, we had the stop loss down here, $250. And then I looked at it, went into profit. I've moved the stop loss up to cost, and then I moved it up into profit slightly. It's actually $43 in profit, the stop loss. I've moved it up. This is me manually trailing. I trail it up manually. I've done it on the EuroCAD as well. It's up at cost, $8. It's up at cost. I moved the stop loss up to break even because this had moved nicely up. The trend is above it. We move the stop loss up. It's a trailing stop. When this goes up further, we'll move the stop up further as well. So, for example, if the Aussie dollar, New Zealand dollar comes all the way down to here, we move the trailing stop down behind it. But I don't do it automated. I do it manually. I do it myself. I move the stops. Then, okay, we have a question. Yes, this is a funded account. This account, as I told you last time, was opened for you guys to take trades with me, okay? This funded account. You guys asked for an account we can trade together. And we were going to do a cash account, but then I decided that I would have to put the risk up, which would be like maybe $10,000 or something like that. So I decided not to do that. We opened a funded account. This is Funded Trader Markets. You can there's a link in the description if you want it as well. And we opened this account, which costs $100, and you can, if I lose that, so be it. That's fine. We're playing with this together. Okay, so this is a funded account that we're doing together. I don't normally trade funded accounts. My own personal accounts, I prefer to use cash, but those are my own personal accounts. Those are my thing. Okay, this is a funded challenge that we're doing together, right? And you guys choose the trades here. So for you asking, Rob, is that a funded account? Most of these trades are chosen by you guys, okay? New Zealand dollar, US dollar, EuroCAD was chosen by you guys, US dollar, Japanese yen. I don't know who chose what, but, and then I actually put the Aussie dollar, New Zealand dollar in this morning myself, and I closed Brent myself this morning because I'm managing the account for you guys at the end of the day. It's just us. It's just for fun. We're trading this together. But this is, yes, this is a funded account. And if you guys want one, you can get one as well in the description. The account's $25,000. Okay. Germany 40, any advice? Same as Germany 30. Here's your advice. It's going long. It's not getting off the train just at the moment. But if I was to wait for this, I would say don't do anything until it comes back to that demand level and fetches that money down there. Okay, if it comes back to there, you can take that money and go along with that. So Germany 30, Germany 40, it's on the train and it's not getting off. It's not getting off at all. Okay. It's staying on there. All right. So, shall we have a look and see if there's any news today? Let's just have a little look here and see what we've got in the way of news. Let me see. Let's go and have a look at the news, shall we? Okay. Oh, and for the random coding channel who asked, there's your funded accounts. All right, they're cheaper than they're cheaper now. So looks like they're on discount at the moment, guys. Go mad. $25K, $89. It was $100 the other day. You can get a 50K for $149, $249. What I always say about these funded accounts, guys, is, you know, if you're gonna invest $2,000 or $3,000 and you lose it, then you're gonna lose that $2,000 or $3,000 if you don't have big money to invest. You buy a small account like that. What I always say is, if you make that money, if you buy a $50,000 account for $150, right, which is really cheap, by the way, and you make the money, if you make $200, withdraw it. Take the money out as soon as you possibly can, and then you've got the account for free. I see these guys complaining about these funded trader accounts and they've lost $100,000, and I'm like, how did you even lose $100,000? How did you leave $100,000 in a funded account? Are you insane? I mean, you don't do that. The sooner you take your profit, the better. In fact, take your profit every week. Just take your profit, okay? As much as you can, take it. Because when it gets too big, they're not going to want to pay you, right? So once you've got that profit, it's yours. I mean, and the account's paid for, and it doesn't cost you anything. I don't know why people leave the money in there. It's crazy. Elon Musk calls for US government to delete entire agencies. Wow. Dollar falls after Trump Putin talk about the end of Ukraine war. Record stock fragility. Okay, not much going. Stocks still have the case of inflation jitters. Interesting. Okay, not much going on there. And I was also looking at putting in a trade of the week instead of just a trade of the day. Looking at that. I guess if I get some more people watching on the live shows and stuff like that, then I'll probably look at putting trade of the week in as well. We'll add that to the whole picture for a bit of fun. Why not, eh? Why not? Okay. Gold. Oh yes, back to gold. Almost forgot about gold. Gold. You see, on Tuesday, I said, let's wait for it to get back here. Buy gold at this level and let it go long. And I missed it. I wasn't watching. Like I say, you don't try and get in now. It's too late. It's probably going to go all the way now. It's long. It's bullish. There's nothing you can do. It's not coming down anytime soon. You know, for this to come down anytime soon, not happening. This is long. End of story. So you're looking for buyers. Wherever you can find buyers, you've got to find buyers. Here's a buy level here now. So I'm going to take this level out that we had here before, because that level is now negated. And I'm just going to, that level also, I'm just going to take it out. I'm going to remove that. And I'm going to just add a new level in here. And that's the next level. Okay. Comes back to that, we can buy. That's a nice demand level. Can buy there, go up. Okay. That's the thing, Kevin. You know, you say, can gold go any higher? And that's the supermarket mentality, is when something's that high and we say it's expensive, in the supermarket, that's expensive. You don't want to buy it. But in the stock market, it's actually really good when it's expensive. It means it's going well. And when it's cheap, it's really bad. It's going bad. Could get worse. So in the stock market, when something's expensive, it means it's just going to get better. And when something's cheap, it's just going to get worse. So yeah, gold can get much higher. Psychologically, human beings like round figures. They like round figures. So I'm betting that they'll hit for 3,000. Watch, they'll hit for 3,000. Everyone wants to hit that 3,000 mark. But I'll tell you what, guys, since we missed that one, let's wait for another one down here. Unless you want to get in early, let's see if this just comes back a little bit and gives us another chance to get in over here. But yeah, pretty much an all-time high. This is a biggie for gold. It's a really biggie for gold. Gold is just a buy. But look, risk to reward's not that great at the moment. You're not going to get much out of it. I mean, it's got a long way to fall, eh? But I am betting it's going to get to the 3,000. The X will round numbers. Just think, this is not a fractal thing. Markets are subjective, and it's all about human beings. What do human beings do? Human beings look at round numbers. Always, they look at round numbers. So they're going to look at the 3,000 mark as a target, for sure. Understand a little bit about psychology, you'll understand a little bit about markets. So if you want to trade gold, buy it long. You're right, it is getting late in the week. So we end up buying gold here, and you go into the weekend, and that's a bit of a nerve-wracking one. So yeah, I agree with that, Kevin. I'll actually rather wait for it to give us a better signal to buy. If I'd saw it here, I would have bought in. If I'd been awake and watching it, I would have bought in here. But we missed that. I don't really want to grab it there. I'd rather just wait and see if we can get a better deal. It doesn't always work out. It might just go to the moon and there it goes. But yeah, it is late in the week and there's lots of things to consider. So let's be cautious. Let's see how we go. I see the Australian dollar, New Zealand dollar as being a little bit, what do you call it? Stubborn. It's being stubborn. But this is what we might call a bit of a retest. See, it's coming back up. It was to retest the level, and then she'll go. I think the main level has already been retested. It's come through, gone back up, and come back down again. Probably retested it on the hourly level. But on the hourly chart, you'll see it might actually go back up and retest all the way up here. That's okay, if it does that, because it'll just retest and then it'll come down. So don't stress about that at all. You must remember that level hasn't been touched for a very long time. So the stop loss is good. You asked how many trades do I make per day. I do not time the market on how many trades I make per day or how many trades I make per week, how many trades I make per year. Sorry, dude, but I don't work that way. Trades available, I take the trade. Trades not available, we don't take the trade. Some days we take no trades. Some days we take 4 trades. And as many trades as we need to take, we take. We take trades when they're available. And if they're not available, we don't take them. Patience is the name of the game. FOMO will make you lose money. Fear will make you lose money. Technical ability, I can teach this to a primary school child. That's easy. Actually getting the strategy right, getting your psychology around it and your mind around it, that's what's going to lose you the money. The FOMO, the fear of missing out, that's what's going to lose you the money. Don't put a target on yourself, amount of trades that you need to take. Don't do that. Just take the trades as they come available. If there's a trade, take it. I am careful on the funded account that we've got here for us because there are limitations on funded accounts. Drawdown per day, drawdown in total, and that sort of thing. So I watch the drawdown so that we don't lose the account. So on my cash account, I might have 20 trades open, I might have 10 trades open, I might have 5 trades open, doesn't matter. But on the funded account, I'm trying to keep it to 4 or 5 so that we don't mess up the account. But now we can actually add more trades because the US dollar, Japanese yen, euro, CAD, I've moved the stop losses up to cost. So it's not going to cost us anything. So effectively, we're only sitting with risk on New Zealand dollar, US dollar, and Aussie dollar, New Zealand dollar. Those are the only two we're sitting with heavy risk on. So we can add actually another 2 trades if we want to. That said, if there's 2 trades that we want to take or that are available. For example, if you wanted to take gold, we could add it if we wanted to, but I don't want to add it right now because it doesn't. There's nothing here that says to me, buy me now. It isn't calling me. It's not saying to me, you need to buy me now. Whereas when I looked at this morning, it was telling me, get into this trade now. It's calling you. Like, look at this. The setup is there. But you look at gold, where's the setup? There's no setup. It's just bullish, but there's no setup saying, buy me now. This is a great buy. So if it comes down into this level, then it's going to shout at me, buy me now. So yeah, I just take a trade as and when it becomes available. So if another trade comes available now, I'll buy it. Or if one of these trades gets taken out with a win or a loss, so be it. I don't mind how many trades I've got. If I've got 2 trades, if I've got 50 trades, it doesn't matter to me as long as they're available, as long as it's there and it says I'm a trade, then I'll take it. So no, I don't measure my trading on how many trades I take per day, per hour, per week, per month. I don't measure it that way. It's not the way I measure trading. So don't get caught up in that. Don't get caught up in that scenario. Take a trade when a trade is good. And you might actually sit in that trade for a really long time. For example, we took this New Zealand dollar, US dollar. Gosh, when did we take this trade, guys? Wendy, you'll know because I'll never forget this is your trade now. You'll know, was it last week? I mean, I don't know, but we've had this trade running for quite a long time. Okay, so, you know, sometimes you run these trades for a long time. CHF, JPY, is it on the side? Let's just go to all symbols. CHF, JPY. Let's put it on the Rob Watch so then we've got it there. And let's just go and have a wee look here. Lists. Okay. CHF, JPY. Let's do a bit of research on it then, shall we? Put it up to the day chart. Put it into a line chart. And immediately what I'm seeing here is we can draw a quick trend line in just over there without too much of stress, straight in. And okay, let's just have a look at what we've got in the way of support. I've got a main support level right there. Let's just put that in. Right, we know that's there. At the top. Okay, let's just see what we've got here. This is quite far away, actually. Very far away. But it is there. Just going to draw it in. Okay. And there's your daily picture. You could draw another one through the middle here and start getting a little bit technical about it. But that's your general overall picture of the CHF JPY. Okay. Let's just take it back to the 4-hour chart. Let's take it back to the candlestick chart. See what we've got here. Okay, the interesting thing about this is it's bounced out of the support. It's moved on to the upside. It's hit this trend resistance now. Strong trend resistance. And it's kind of bouncing to the downside. Your risk to reward, not that great because your support is really close by here in comparison to your resistance up here. What I would like to see with this is if it was to break through that trend resistance there, then I might buy it. If I want to go short on this, what I'll do, now I'm just going to play around here a little bit. I don't want to confuse you guys, but this is what I would do. I'll just have a little nibble here. Let me just see if I can. It's not the best, but yeah. You know, let it break through there. And then maybe you've got a bit of a short trade, but your risk to reward's not great, eh? You know, you don't have a massive trade here. It could break through there and give you a trade down to 166, or it could break through there and give you this would be the nicer trade, the long trade. If it was to break through that trend resistance, you got a really nice trade all the way up to there. That would be good. That would be a nice trade. It is bearish overall though, and the trend is your friend. Breaks through here, you could have a nice trade done. Okay. New Zealand dollar, US dollar stays at the bottom, created on the 5th. True, there you go. Oh, I didn't even look at that. I didn't know I had that on there. Okay, great. So we actually created that quite a long time ago, that trade. So this trade's been going for a long time. Been running that trade for a long time. 5, 6, 7 days. It's a long time, eh? Keep a trade. But I'm keeping the trades because it's for the group, and I'm trying not to dump the trades too quickly for you guys, so I'm holding on, sitting on my hands, taking my hands off the wheel and seeing what's happening. Okay, so you can take this trade if it breaks through there or if it breaks through there. You live and learn, yeah. You know, this C Trader, this platform is actually, when I created this account for us a few weeks ago, is the first time I've used this platform, and I've been trading for 30 years. It's the first time I'm using C Trader, but I think it's something that funded markets use and that sort of thing. I've been using MetaTrader 5 for, gosh, I don't know how many years. Gosh, I can't tell you. Such a long time. And yeah, that's a long time I've been using this platform. Seriously long time. And then I do like the TradingView platforms. They're quite nice. They're quite handy. But I don't need all the stuff that they give you, you know, so it's okay. I don't need all the fancy fandangled stuff. But I actually chose this to see what it looked like. And there you go. So now just having some fun with it. Make life a bit different. But I didn't know they had this on there, created on the 5th. That's brilliant. I didn't even look at that. I just look at that and that. The names and profit loss. That's it. I'm glad you're enjoying watching. That's great. It's always good, Brony. Always good. Now, let's see. Where were we? So that guy who asked me about Heiken Ashi and depth of market, if you're here, please note that somewhere in the middle of this video, I did go through it, okay? And you need to go and find it, because I did ask if you were here and I wanted to go through it for you, and I didn't get a comment, so you'll have to go back and look for it. I did put it in the live show. I promised you I would, and I did, and it's there, so go and find it. Yeah, quite a few guys actually do have a link to TradingView, and if they offer it to you, I would use the TradingView. It's actually quite cool. These guys, this funded trader markets that we're using for this, actually have the TradingView as well on the match trader, not on this side. So on the other account that we had, I've actually still got that. Not bothering with it much, but I've still got it. And that one uses the TradingView. But I actually wanted to try this one out. But we said this is the account that we're playing with. So this is the account that we're playing with. This is the challenge, guys. So the group, this is our challenge. This is the one we're playing with. I'm not going to change it. We'll do this. And when this is over, we'll look again, see what we do next. Hi, Peter. Welcome. It's okay if you're joining late. Well, actually, maybe not, because it is very late. And how much longer can I be around, obviously? But yeah, okay. Once we start getting 100 concurrent viewers, I'll extend the show and I'll even have more shows. But you know, we don't have a lot of viewers, and it's for you guys, and I like hanging out with you guys, so it's a bit of fun. I enjoy it. Once it becomes big, I want to make sure that I know who you guys are, because you guys were here at the beginning. Yeah, there'll be in the future, maybe a whole lot of new people that come along, and we don't want to forget our beginnings, our early beginnings. But as a group, we're a nice group. We have a bit of fun, and I'm enjoying it, and that's good. That's good fun. It's good fun for all of us, and it keeps my mind occupied as well, instead of just sitting trading. And making the videos is a bit of fun as well. I see it's not everybody wants to see what I say, but that's great. You know, some people want to hear much nicer things like, you're going to make $1 million in a week. Yeah, maybe I should make videos like that and make thousands of views or millions of views and buy a Lamborghini with the money. What do you say? Yes, with 100 viewers, you'd be afraid I wouldn't answer all your questions. It might get tricky for me, yeah, but I have a backup plan for that. I do have a backup plan for that. If that happens, then we'll sort that out. Don't worry. I joined late, but I'm really enjoying it, Rob. Thanks. I'm glad you guys are here and enjoying it. That's fantastic. But yeah, I can imagine if we've got 100 viewers at one time, how many questions we'll have, and how big the chat would be, and how I might, and how many trades we might have to take, because everybody will want to take a trade, and I'll have to be going through. I'll be going through trades, and I'll be, maybe I'll lose all my hair or something. I don't know. Might go insane. I see a lot of the guys, what they do. I had a look, and one or two of the big guys, and they trade the smaller time frames, obviously, and then they just trade. They don't actually even talk to you guys, and people seem to like that. They enjoy that, and they got like loads of people on there, so they're not really answering any questions. I saw one with the comments are completely switched off. They're not even chatting, so they're not even interacting. Thousands of viewers, people love it. I sometimes wonder. Yeah. And I'd be out in my Lambo. Yes, Peter, that's true. I'll be out driving my Lambo. I forgot about that. Yeah, I'll be out driving my Lambo that I bought with all the YouTube money. Yeah, of course. Totally forgot about that. Yeah, totally. Because, yeah, for those of you who believe that trading is going to buy you a Lambo, gosh, got a long way to go, guys. Got a long way to go. Trading is a difficult thing. And I know you want to hear it's easy, but the system's easy. This I can teach to a primary school child, as I've told you over and over again. But getting over the FOMO, the fear, and the strategy and the psychology, that you're going to struggle with for years and years and years. You're going to struggle with that. That's not going to be easy for you. I find the best way is not to watch the charts. The best way is actually to take these trades, walk away, go and do your thing, and come and check them later and get the shock. Then, what happened, and there's nothing you can do about it. Yeah, well, that's a good thing. I'm so glad to hear that, Lincoln, that you just want to learn to trade and that it's grounding you. And that's what my intention is, to try and, yeah, exactly that. Get everybody grounded. Get your feet on the ground and get down to reality. There's a reality here. And the reality is, this isn't all flash. This isn't all money flying around in the sky. It's easy for me to sit here and make videos after videos after videos about me making money. I can sit here and I can do 5-minute charts, 15-minute charts, 1-hour charts, even the 4-hour charts. I show you all my wins, and I can make video after video after video showing you these wins and say, look at this, look at how this worked, look at how that worked, look at this, look at that, look at that, and show you these, I don't know, portfolios and what have you. And I don't know how you're going to gain anything from that. Even if it was true, I don't know how you would gain anything from it. There's nothing for you to gain from that. No information whatsoever. It's just, look at me. I look at how I won $5, you know. Use this system and win $20. Nobody's telling you about psychology. Nobody's telling you about strategy. Nobody's telling you about what you need to do to actually make the money. They're just showing you how to take a high probability trade. This is how you take a high probability trade. Primary school child, click, oh, took the trade. No. Yes, Kevin, in the beginning, it takes an insane amount of time to put all the levels in. Because, you know, you're trying to figure out where to put them and how to put them and whatnot. Makes sense. Yeah. Yes, Peter, you know, some of the clickbait headline. Don't get me wrong, I use my clickbait headlines, you know, trying to, you know, get my message out there. But, yeah, I get what you're saying. I do get what you're saying. The difference is I put my clickbait headlines out there and I try and tell you guys what the facts are. But at the end of the day, wow, it's just that this, you know, it's not right. It's not right. But yeah, it takes you a long time. You know, like I said, Kevin, you know, when I started out and there was no computers, imagine how much time that took. I had this massive, massive file that I bought in a course with. And every day I used to sit and put all the prices in and draw these lines in and draw the line. Do you know how we used to trade when we started out? When we first started out, when I first started out, we would put all the prices in. I would buy the newspaper every day and get all the prices. And we only traded shares. And we only traded we didn't have 500 to 100 to 1 gearing or anything like that. Funded markets is a dream, you know. Anyway, you had your own money out your pocket and you traded it, and that was it. And every day I would put those prices in, I would draw that chart, and I would draw my 20-day moving average through the chart. And if the price was above the average, I would buy. And if the price was below the average, I would sell. That was the basis of my trading. I drew a line in the sand, and I traded above it and below it, and that was it. That was how we traded. So let's be perfectly honest, guys. That was the way we traded. So when this all came about, when all these fancy things came about it, don't get me wrong, I got led down the garden path. Man, I got led down there. I was like, this is so exciting. All these fancy things, all these fancy indicators, all these goodies and charts, flashing lights and whatnot. I got stuck in. And I quickly learned my lesson. It's like, what am I doing? I had to stop somewhere down the line and say, whoa, wait a minute. I'm going down the wrong path here. And I had to really go back to basics. And that's when I actually realized that going back to basics meant price action. And that's what we learned to trade with right in the beginning. And I took all the indicators out, took all the rubbish out, took all the noise out, and went back to where we started. And that's what brought this on. And obviously this is all based on, I don't know if you know, but this is very much based on what's known as the Wyckoff system. And but the Wyckoff system is just a much more complicated version of what I'm showing you. It's just like, you know, bounce off here and bounce off there. And it's just a much more complicated version of price action of what I'm showing you here. And then if you just keep it like that and you just trade like that, you'll be okay. All I'm doing is giving you advanced information. Before you go down that garden path, you get lost and you can't find your way back. That's all. Peter, welcome to Trade of the Day. I'm glad to have you, and I'm glad to have you on. Thanks for the support. Absolutely marvelous. The channel appreciates it. It's so good to have you guys. And well, I'm kind of, somebody mentioned we're the A team, so I'm just kind of calling us the A team because of that. Okay, Brummy, Rob, is it okay to put your SF on the daily and on the 1 hour and enter on the 1 hour? I'm finding 4 hours too long. I'm also watching the candle for hours. It's what I do. Yes, you can trade on the 1 hour. Absolutely. If you feel better about trading on the 1 hour, trade on the 1 hour. Just don't go down to the 5 minutes and the 15 minutes and start driving yourself insane. You can, but you're going to lose. So 1 hour, more than fine. If you feel that you want to trade a little bit faster and you want to do the 1 hour, go for it. That's fine. 1 hour is good. Take your levels from the day and the 4 hour and drop down to the 1 hour and take your trades. That's more than happy with that. That'll be fine. Okay. So we've got Peter on board, and that's great. So, and I hope you guys will, you got to be back for all the live shows now on a regular basis as well. And then you're obviously going to hear my voice every morning as well as we talk about the markets. Welcome to our group, and thanks. And we like coffee trading and having a wee bit of fun. There we go. I called them the A-team, and you've kept it going. It was you, Kevin. There we go. You see, you said we're the A-team, so that's it. We're the A-team now. You see, you can go to the 30 minutes, but you're starting to push the limits there. Random code, so can we go to the 30 minutes? Totally. If you want to, but you're pushing the limits going to the 30 minutes, just remember that. What I would do with the 30 minutes, okay, just my 50 cents worth here. You're looking at the 4 hour, and you're thinking, should I or shouldn't I take a trade on this particular product? You go down to the 1 hour, and you think, okay, maybe not. Take it down to the 30 minutes. Can I get a sniper entry out of this? Because you would have extra candles, okay? So what you can do with the 30 minutes is just say, this is the 30 minutes now, guys. Can I get a sniper entry out of it? But maybe trade the 1 hour, right? So what you've got here, that's your 1 hour, that's your 30 minutes. What have you got on the 30 minutes? You've got an extra candle, right? It's telling you to go short. It's a sniper entry that you can take. And on the 4 hour, you're sitting here falling asleep waiting for the trade. So I agree with you. You can do that. But do yourself a favor. Maybe trade on the 1 hour if you're a bit impatient. Patience is going to cost you. Eh? Be careful. You need to be patient in this game. But if you really want to, you can take your sniper entries. You can even take your sniper entries on the 15 minutes. Okay. Just remember, the lower you go down with the time frames, the lower you go down with the time frames, the more unreliable your information is becoming. But that said, you have reliable information here that you've picked up off your 4 hour and perhaps even your daily, right? Now, your daily is telling you that's kind of green. So that's the reliable information. The reliable information is we're not bearish yet. So then you drop it down to the 4 hour and it's saying, but we're becoming bearish. Still quite reliable information. Now the information is becoming unreliable because there's less and less people involved. Now we're on the 1 hour, it's telling you it's quite bearish. Now we're on the 30 minutes, it's telling you we're quite bearish. Now we go to the 15 minutes and it's telling you we're very bearish. But it's unreliable information. This could turn in an instant because it's on a 15 minute. On the daily, it was telling you that this is actually still long. But on the 15 minute, it's giving you a sniper entry. It's telling you, actually, this candle's going down. But now, what you got to be careful of when you take the trade, you say, all right, I want to take the trade because it's telling me it's bearish. On the daily, actually, if you look at the daily, it is bearish because you see that tail? That's a hammer, inverted hammer. That tail tells you that all the sellers have come back into the market. There's a little blocky at the bottom. I don't think the candle's closed yet, but it's a day, right? So if that closes tonight on that level, this is very bearish. This is a bearish candle, if you know anything about candles. Let's go to the weekly. There's your problem. The weekly is telling you it's pretty bullish, but it's an inside candle. And with it being an inside candle, we're looking good for a short. So if you really want to analyze this trade, this is a short trade. CHF JPY. Okay, that's how you can analyze. You can drop down all the time frames. I mean, you can go mad. You can go all the way down. And all the smaller time frames are telling you it's short. All the bigger time frames are telling you it's short. And of course, the daily time frame is also telling you it's short. It's probably going to close there tonight. We could actually take a short on this trade. Right now, we could take a short on this trade. So maybe we should, because we just analyzed it. So maybe we should take a short on this trade. All say yes, let's take a trade on this particular item. And the lots are perfect. Look, $220. We'll leave it there. So no, wait a minute. Stop loss. Ooh, almost made a mistake there. Okay, we want the stop loss. Let's put the stop loss at 170, right? What do you guys think? 170, nice and clear above that and level up there. So let's put the stop loss at 170. Okay, 170. We want it to be a sell, so 170 is correct. And let's put the take profit at 167. 167. And okay, that's a bit big for us. We only want to lose $250. We don't want to lose more than that. So that's too much. 0.8. Let's just put it down at 0.6, 394. 0.3, 197. So 0.35 will most likely be the correct amount. That will give us a $230 stop loss on a sell. And yeah, okay, with a $455 profit. And there you go, guys. I've added another trade, right? CHF JPY, because we just analyzed it, so we might as well add it in, right? So now you've got another trade. And for you who asked random coding, you said to me, how many trades do you take per day? I don't know. I just take trades when they're there. Okay, but that looks like a nice trade. We took the trade. Right, so where were we? Okay, I'm as guilty as charged. Okay, what time does it start in the morning in the USA? Peter, don't worry. What I do is I do a trade of the day every single day for you guys. And for you guys that are members, and you can watch it anytime. So when you get up, the video will be there. Okay, it'll be ready for you. It's not live. I don't do it live. I just get up, I analyze the market, I put a video together for you, 5 to 8 minutes, sometimes 10 minutes. Little video that you can go through. It doesn't even have my face on it, just the charts, and we just go through all these favorites that we've got here, and we have a look at what we might be trading or not trading on any given day. Okay. Right. Okay, it's not bullish in the daily. Look here. You see here, look at the daily. It's bearish. Okay, do you see what I'm seeing here? I'm going to make it really, 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 really big. Okay. You see that? That's an inverted hammer. It might be green, but it's inverted. You see there? All the sellers have come back into the market. Do you see that? And then you see there's a little hammer at the bottom. That might even turn red by the end of the day. Who knows? But that is a bearish candle. It hasn't broken through there, but it is a bearish candle. And then if you look at the weekly, there's an inside candle on there. Okay, so do keep an eye on things. Maybe have a look at candles. You don't have to play much into candles. I don't want to confuse you guys. I just know that when I see tails like that, that's bearish. Doesn't matter about the color. Don't worry about the color. And then this is breaking through the trend support. And then we've gone down all the way to the 15-minute chart. And it's clearly, okay, it's going to come back, do a retest, and then go down. Okay. So there you go. Okay. So that's what we're looking at. Ooh, there we go. Okay. And remember, markets are 50-50. It either works or it doesn't work. No big deal. Okay. Okay. Would you start with a funding 10K account, or which funding account you recommend? I prefer these 25K accounts because they give you more space. 10K account is okay. I mean, if you want to go with a 10K account, but I mean, what's the difference in price? I'm just going to have a look here quickly. I'm not going to show you guys anything. I'm just going to have a look at the home page. A 10K account is going to cost you $52 on that link in the description, and a 25K account is going to cost you $89. A 50K account is going to cost you $149. So it's up to you how much you want to spend, but I'd probably go for the 25 or the 100. I mean, the 25 or the 50. because then you get more to go with. If you're still learning, why not go with the 10? Because you can just going to work with the percentages anyway. And then you can grow the account accordingly and what have you. Okay. You might lose the account. Just don't forget. But then you're going to lose $50 or whatever the case and start again. Okay. I refer back to Trade of the Day posts sometimes. I use it a lot. I don't depend on it, but it makes a great reference. That's what I do it for. I just do it for, I'm just trying to analyze the markets. Just remember, my Trade of the Day is not like, oh, you have to trade this. It's just my opinion on how the market's doing on that particular day or any given day. So it just helps you guys see what I'm doing or what I'm thinking. That's all. Okay. And I'm not always right. I try to be, but I'm not always right. So if there's a tail on top that's sellers and tail at the bottom it's buyers, no matter the color. Yes, totally. That's why I like to have the candles. You see this? You see that? All the buyers came back into the market. You can clearly see it. I mean, a lot of people will play a lot of different things into candles, and they'll make it really complicated. But if you keep it simple, the simple things about a candle are, if it's a huge green candle and it's like got what I call a shaven head at the top and pretty much a shaven head at the bottom, that's a solid green candle. What does that tell you guys? It tells you guys there's an incredible amount of buying power going in there, and then little candles around it, you know? Look at this red candle here. Look at how all the it means it's sold down and all the buyers forced back into the market. They came back into the market. Start to see them as people and stop seeing them as algorithms. Start seeing them as people. These are human beings. Now you see that tail? That's where all the buyers came back into the market. You see that? That's that's like, think of a crowd of people waiting outside for Black Friday of a store. That's it. That's that big green candle going up there. Everybody's rushing in to buy all the iPhones. That's your green candle there. Okay, keep an eye on that. Keep an eye on that. There are complicated things like these inside candles, outside candles, and don't get too confused by that. And if you see a little candle with a tail the same length on both sides and a little body in the middle, it's generally indecision. So that means the people aren't sure which way they want to go. You see undecided, but then also you get the spinning tops, which means the market's turning. Keep an eye out for that as well. There's a lot of things to learn about candles. Let's not go in too much depth just yet. Okay, we'll see what happens at the end of the day. Okay. Okay, what do you think about future trading and people who sell trading courses worth 5K, like Bernd Strupinski, if there's a tail on top? Look, I don't hold anything against anybody else who's teaching people how to trade the markets. Everybody's got their 10 cents worth. Everybody's got their point of view. Everybody's got some information that might be useful to you. And if the information is free, that's great. And if it's not free, is it worth it? Now, the problem I have with these courses that are so expensive, and I don't know why they're so expensive, but the problem I have with these courses that are so expensive is 9 times out of 10, they only show you how to take a high probability trade. Most of them don't teach you the psychology. Most of them don't teach you the strategy behind trading. They just teach you high probability trading. And that's kind of easy to trade. So what happens is people go on these expensive courses and they come back thinking they know everything about the markets with abbreviations and, you know, all this mathematical stuff and all the rest of it. And they come back to trade and then they start trading and they start losing and then they're confused as to why am I suddenly losing? And it's because they haven't taught you the psychology and they haven't taught you the strategy. What they've taught you is how to take a high probability trade on some or another system. And that's where you're going to come short. That's where it's going to work against you. So would I pay $5,000 for a course? No, I wouldn't. I'd watch someone like me or any of the other guys and pick up as much information as you can. Put it all together, work it out for yourself, figure out what's comfortable for you, what works best for you, and run with that information. Practice on a demo account, and you'll get there. Okay. Go and spend $5,000 on a course? No, I don't think so. I don't think that's worth it at all. I don't think that's gonna take you to where you want to be. It'll give you a system. It'll give you a system that'll teach you how to take high probability trades. And it'll give you some information on the markets. But will it teach you how to trade? Probably not. The bad news is you're going to have to really learn how to trade by yourself. At the end of the day, you're going to have to figure this out for yourself. You're going to have to work it out. And with watching guys like me and other guys and whatnot, you're going to have to put a lot of information together and figure it out. And even if you do pay for that course and you do go on that course, you're going to come back and you're still going to end up looking for people like me to give you some information. It's not going to be the thing that's going to make your day. You'll go on that course, you'll get some information, but you'll have spent a lot of money for nothing. $5,000 is a lot of money. If you buy a couple of funded accounts, for example, and you mess them up totally, you're not going to spend $5,000. So figure it out as you go. Watch as much. There's a lot of free information available out there that you can grab. Grab as much free information as you can, and work it out. Work it out. So no, I'm not big on buying courses. No. In fact, if I was to put a course together for you guys, a proper course, I'd probably give it away. I'd probably give it away for free. Or something, or put it in the members area or something like that. But other than that, no, a course is it's not going to make you a great trader. It's not. Okay. If you want a random coding channel, if you want something good, I've actually left some links in the description of a few good books that you can buy. Some really good books on trading. One of them being from Tom Hugot. He's on YouTube as well, but he trades high stakes 5-minute trading, which if you get into that, people think they're going to be able to copy him, but you can't copy another trader. But what he's good at is teaching the psychology. He's very good at teaching you the psychology behind trading. Read his book. His book is in my description if you want to get it as well. There's a couple of other good books there as well that will give you some information. And yeah, go and have a look at my free Forex book as well. That's also there. Check that stuff out. That's good. Okay, we're trading CFDs, Kevin. Hi, Daniel. You can learn to make 5K from following Rob instead and use that to pay for your courses. Everything is for free online, as Daniel says. It's fun to see the money in the markets when you learned what to look for. Hi, Daniel. I'm working on my emotions to get those trades and coin on it. Mostly they apply selling pressure to make money. Yes, that's generally the thing. There's enough money in the market every day. Don't take the courses of Bernd Stupinski, computers trading. Okay. Totally fake. Okay. Most of them are, by the way, but I don't want to talk bad about anyone, okay? Everyone's got something to offer. Let me be honest, okay? Everyone has got something to offer, probably even that oak. And, don't get sucked into this business of that one's fake and that one's real and all the rest of it. Just take the information that you need for yourself and test it for yourself and see, does this work for me? Will this work for me? And because, no one trader's system or information or whatever might work for you 100%. So you might take a bit from that guy and a bit from that guy and a bit from that guy, and you can collate it all together and figure out what works for yourself. tons of free information available. Okay, 30 years ago, I learned my trade from a seasoned pros like Rob, became a contractor, and I did well for a long time. I feel like I'm an apprentice trader now. It feels the same as it did back then. Yeah, it's pretty much it. Cheers, have a good day. Cheers, Peter. Good to see you on board again. I'm going to have to move on in a bit as well, as it's been here for a long time. Tom Hubert says people don't fail because they don't know enough about technical analysis. They fail because they don't understand what the markets are doing to their minds. And that's well said, Daniel. That's exactly the point. It's all in the mind. It's all the psychology. The psychology of trading, the strategy of trading is the most important thing that you're going to have to overcome in trading. And all of these courses that cost you $5,000, as you pointed out there, all they do is they teach you a high probability trading system, and they don't really teach you how to trade at the end of the day, or what the and also how do you teach someone the actual psychology. I can teach you a strategy, and I can tell you about the psychology. I can tell you about FOMO. I can tell you about fear, as Tom does as well. We can tell you all these things, but we can't implement it on you. We can't make you do it. We can't force your mind to work that way. So you just have to understand what it's all about. It's a difficult thing to get over. But yeah, it's very much, like I said to you earlier, when the news came out, take your hand off the wheel and let it go. You know, there's not much you can do to actually to control it. But guys, I do have to be on my way now. It's been quite a while. We've been here for quite a while, and it's been a good one. And wow, we've actually got 28 viewers on the go. Like I said, when we've got 100, and Kevin said when we've got 100, I won't be able to answer all the questions. But when we've got 100 concurrent viewers, that'll be great. I am kind of stuck on 9,500 subscribers. We're great to have 10,000 and, you know, cross that round number. Like I said to you, we as human beings psychologically just love round numbers. So when you're trading, watch for those round numbers. Those round numbers on the side over here, really, really important. Human beings don't work in decimals. They work in round numbers. I also work in round numbers. So hopefully I can get up to that 10,000 round number, make me feel better. Okay, so yeah, guys, it's been fantastic. And I hope to see you guys again really soon on Tuesday. I believe Tuesday morning is the next one. Once we start getting like maybe 100 concurrent viewers, I'll do more live shows and I'll increase and whatnot. But for now, we're building and we're growing as a team, and we'll see where we come out. Okay, so Tom's book's on discount. Take a lot for SA buyers. Okay, cool. That's great. Fantastic stuff. Good news. We're all in this to win. And thank you guys. I want to thank you guys for being here today. It's been fun. It's been fun being with you guys again. I love it every time. I still enjoy it every single time that I come on the live shows and I'm here with you guys. It just makes my day, actually. It makes me feel great. So yeah, I do intend to increase the streaming once we have many, many, many more viewers. But for now, we keep it to twice a week, and let's enjoy it. Guys, have a great trading day. Enjoy the rest of the day. Enjoy the Friday and the weekend, and I'll see you back soon. Tomorrow morning, members video, and during the day. Tomorrow, I brought out a video, a little bit about how I started trading and whatnot. Don't forget to come back and watch that as well. Cheers, guys. Have a fantastic